Today, we're taking a deep look at Amgen, ticker symbol AMGN, one of the world's largest biotechnology companies. In this video, we will analyze Amgen's business, revenue growth, earnings, profitability, free cash flow, dividend, debt, valuation, analyst expectations, growth potential, and major risks. Most importantly, we will answer one important question. After the stock's strong performance, is Amgen still a good investment at its current valuation? Amgen is a major biotechnology and pharmaceutical company focused on discovering, developing, manufacturing, and delivering medicines for serious illnesses. The company has a large portfolio of established products, including Enbrel, Otezla, Prolia, Exgeva, and Repatha. With approximately 31,500 employees and a global commercial presence, Amgen operates at a massive scale. This gives the company a strong foundation of recurring revenue, while its research pipeline provides opportunities for future growth. Based on the latest stock analysis data, Amgen has been trading around the low $400 range, giving the company a market capitalization of roughly $224 billion. The stock has appreciated significantly compared with its levels from previous years. That strong performance is positive for existing shareholders, but it also means new investors need to pay closer attention to valuation and future growth expectations rather than simply assuming the stock is still cheap. Let's start with revenue. Amgen generated approximately $36.75 billion in revenue during 2025, representing close to 10% year-over-year growth. On a trailing 12-month basis, revenue reached approximately $37.22 billion, up around 9% year-over-year. This is an encouraging sign because Amgen is not simply maintaining its existing business. The company has been able to grow its top line at a meaningful rate. Amgen's profitability is another major strength. Over the trailing 12 months, the company generated approximately $7.8 billion in net income and around $14.37 in earnings per share. Its gross margin was above 71%, while its operating margin was approximately 32.6%, and its net profit margin was around 21%. These numbers demonstrate the powerful economics of Amgen's pharmaceutical business and its ability to convert a significant portion of revenue into profit. The earnings trend is particularly interesting. Amgen reported approximately $7.71 billion in earnings for 2025, compared with roughly $4.09 billion in 2024. That represents a substantial improvement in reported earnings. Trailing 12-month EPS was approximately $14.37, with EPS growth above 30%, according to the latest stock analysis data. However, investors should be careful about extrapolating 1 year's unusually strong earnings growth indefinitely. Future growth will depend on the company's products, pipeline, acquisitions, and operating performance. Cash flow is one of the most important metrics for a mature pharmaceutical company, and Amgen generates substantial amounts of it. Over the last 12 months, operating cash flow was approximately $10.76 billion, while capital expenditures were around $2.16 billion. That resulted in approximately $8.6 billion of free cash flow. Strong free cash flow gives Amgen the financial flexibility to fund research and development, pay dividends, invest in acquisitions, reduce debt, and return capital to shareholders. For income-focused investors, Amgen's dividend is another important attraction. The annual dividend is approximately $10.08 per share, representing a yield of around 2.56% based on the reference share price. The company has also increased its dividend for many consecutive years, with dividend growth of approximately 5.8% year-over-year, according to the latest data. However, the payout ratio is around 68%, so investors should continue monitoring earnings and free cash flow to make sure dividend growth remains sustainable. Now let's look at one of the biggest concerns: debt. Amgen has approximately $57.3 billion in total debt, compared with around $12 billion in cash, leaving the company with significant net debt. This does not automatically make Amgen a bad investment because large pharmaceutical companies can operate successfully with substantial leverage. However, high debt reduces financial flexibility. If interest costs remain high, earnings growth slows or cash flow weakens, debt could become a more important issue for shareholders. Valuation is where the Amgen story becomes more complicated. Based on the latest stock analysis snapshot, Amgen's trailing price-to-earnings ratio is around 27 times, while its forward P/E is much lower at approximately 17 times. The difference indicates that analysts expect future earnings to be significantly stronger than the trailing figure. However, after the stock's strong rally, investors should not assume that Amgen is automatically undervalued. Future returns will depend heavily on whether earnings growth can justify the current valuation. Analyst expectations are also important. Stock analysis shows a consensus rating of buy from 34 analysts, while the average price target is approximately $356.69 based on the reference data. Interestingly, that average target is below the recent market price. This highlights an important lesson. A buy consensus does not necessarily mean analysts expect huge upside from the current price. Investors should examine the entire analyst target range and understand the assumptions behind those forecasts rather than focusing on one extremely bullish target. When we look further ahead, Amgen's expected growth appears much more moderate than its recent earnings growth. Stock analysis currently shows approximately 2.65% expected 3-year revenue growth and around 3.78% expected 3-year EPS growth. This suggests that investors increasingly view Amgen as a mature, cash-generating healthcare company rather than a hyper-growth biotechnology stock. Future growth will therefore depend heavily on successful new drug launches, pipeline development, acquisitions, pricing, and the company's ability to maintain its existing portfolio. There are several potential catalysts that could drive Amgen higher. The first is continued growth from its existing blockbuster medicines. The second is successful development and commercialization of new drugs from its pipeline. The third is continued earnings and free cash flow growth. Another potential catalyst is continued dividend growth. Finally, if the stock experiences a significant valuation correction while the underlying business remains strong, that could create a more attractive entry point for long-term investors. However, investors also need to understand the risks. Amgen faces drug pricing pressure, regulatory risks, competition from biosimilars, patent expirations, clinical trial failures, acquisition-related risks, and potential pressure on its existing products. The company's substantial debt is another factor to monitor. There is also valuation risk. If earnings growth slows while the stock remains expensive, investors could experience multiple compression even if Amgen continues to generate strong profits. The bull case for Amgen is straightforward. The company has a massive pharmaceutical business, strong margins, significant free cash flow, an established portfolio of medicines, and a growing dividend. If the company successfully develops new products and its pipeline offsets pressure from older products, earnings could continue growing. In this scenario, shareholders could potentially benefit from earnings growth, dividend income, and long-term appreciation in the stock price. The bear case focuses on valuation, debt, and slower future growth. If revenue growth falls toward low single digits while debt remains elevated, investors may become less willing to pay a premium valuation for Amgen. Competition from biosimilars, regulatory pressure, or disappointing pipeline results could also hurt future earnings. In that scenario, the stock could experience significant valuation compression, even though the underlying business remains profitable. Overall, Amgen looks like a financially powerful but increasingly valuation-sensitive healthcare company. The fundamentals are attractive, with approximately $37 billion in trailing revenue, strong profitability, around $8.6 billion in free cash flow, and a sizable dividend. However, the stock has already experienced a significant rally, while long-term consensus growth expectations remain relatively modest. Therefore, the key question isn't whether Amgen is a good company. The bigger question is whether the current stock price provides investors with enough margin of safety. So, is AMGN a buy right now? My view is that Amgen deserves serious attention from long-term investors, especially investors looking for healthcare exposure, strong cash generation, profitability, and dividends. But after a strong rally, I would be more selective about the entry price rather than simply chasing the stock higher. Investors should closely monitor revenue growth, EPS growth, free cash flow, debt reduction, dividend growth, and the company's pipeline before making a decision. My final takeaway is that Amgen is a high-quality pharmaceutical business, but a great company does not always mean the stock is a great buy at every price. The company's strong cash generation, profitability, established products, and dividend provide a solid foundation. On the other hand, debt, moderate long-term growth expectations, competitive pressure, and valuation create important risks. For long-term investors, the ideal strategy may be to focus on the relationship between the company's future earnings growth and the price you are paying today. So, what do you think about AMGN at its current price? Is Amgen still undervalued, or has the recent rally already priced in too much future growth? Let me know your AMGN price target in the comments. If you found this analysis useful, make sure to like the video, subscribe to the channel, and turn on notifications for more detailed stock market analysis. Remember, this video is for educational purposes only and is not financial advice. Always do your own research before making an investment decision.